All right, so let's get started. Yeah. So hello, and thank you for joining us today, and one hearty welcome to everybody to InvestorAi Academy. I see some familiar faces from last time, but welcome to everyone. So my name is Sarthak. I head product development at Bridgeweave, and if there are parts of the app you do not understand, you know whom to blame. I'm your host and host today. Before I start, let me just give you an intro on what Bridgeweave is and what we stand for. So, you know, just a recap. So Bridgeweave is a fintech based out of London. We set up Bridgeweave 3 years back to help assist retail investors in their daily trading and investment activities. Although this might sound very similar to you because a lot of fintechs, etc., kind of surface signals and give buy sell recommendations, but this is where the similarity ends because the approach that Bridgeweave and InvestorAI takes is very different from what your traditional brokers and research analysts do. We use machine learning and artificial intelligence to surface signal rather than going the same discounted cash flow methodology. Some of you are our users, you've probably seen some of this stuff already. So in the next 30 minutes, we shall dive deep into whatever this mystery of investing is from someone who's done this for over 4 decades across various roles in the world. So Akshay has been playing leadership roles across major banks in the world. His last role was the global head of Barclays Wealth. He was a country head for Steve for many years, sits on many Fortune 500 company boards, including Mindtree, and lastly, he's also the founder and chairman of Bridgeway. So, guys, without further delay, let's please welcome Akshay Vargava.
Yeah. Thank you, Sarthak, and a real, hearty welcome to everybody who has taken the time to join us. I really appreciate the time you've taken. I do see some familiar names. Nupur, welcome. It's really a privilege to see a wealth management professional joining this webinar. So thank you very much for that. We are going to be talking about value investing. And so I'm going to begin with sharing my screen. I will share, the way I'm going to do this, I'm going to talk a little bit about value investing in general as to what it is, how it works, and so on and so forth. Then I'm going to show you how to read the value investing pages in the Investor AI app. And then I'm going to show you how a couple of really cool things that may not be obvious to everybody using it for the first time. So let me just let me present my screen. So today's session is on finding value stocks. Before I go there, it's worth talking about what is value investing. And very simply stated, it is finding high quality stocks with strong fundamentals whose price has fallen. That's really the heart of this whole thing. And the concept was developed by a gentleman called Benjamin Graham, together with David Todd. Both of these people were professors in Columbia University. And they came up with the concept in 1934. This is nearly 100-year-old idea. But, like with most good ideas, it has withstood the test of time. And in 1934, Benjamin Graham said, you buy stocks that have steady profits, that are trading at low prices, have a low price earnings ratio, and have relatively low debt. Now, today's definition may be slightly different, but not very much different. So it is really a battle-tested concept that has been around for little less than 100 years. So something that's worth paying attention to. Let's just see how the value investing algorithm works. The way we have thought about it is that, and a lot of our personal thinking has gone into it. So Sarthak and I, when we were sort of designing this, we sort of said to ourselves, okay, if I want to find a value stock, what do I need to know? And we finally came down to three things that we need to know. Is it an undervalued company? Secondly, is it a good company? Because there's no point it being undervalued if it's a lousy company, because that would be like catching a falling knife. So is it an undervalued company, first of all? Secondly, is it a good company? And thirdly, has this happened before? And if it has happened before, you know, would I have made money? So some kind of backtesting. So conceptually, that's really what it is. And that's what we have tried to display in a very nice and an easy to understand way. So if you open the first page of any value investing insight within Investor AI, at the top banner, you will see the name of the company, the exchange it is listed on, and the current price. Secondly, below that, you will see three tiles, and the red one is the active one, and you can click on any one of them, it becomes active. And the red, which is active, is now telling me that this company is trading at the fourth percentile of its 10-year relative valuation. So let's unpack this statement a little bit. What it is telling me, so what we do is we take every single company that we have in the system, which is close to 6,000 companies globally. We calculate the relative value of that company against the index every day. And we use 20th percentile as our threshold. So whenever the relative value is below 20th percentile, then it becomes a candidate for an insight. It is still not yet an insight. It has to pass many tests. So it becomes a candidate for an insight. Then so this company has passed that 20% threshold, and I will talk about other tests in a little bit of time. So it is telling me that it is now on the fourth percentile, so very undervalued. The insight was generated on the 2nd of March, so this is very, very recent, just last week, when price was $42.01, and at that time it was the third percentile. Since then, the price has moved up a little bit. So, the insight since the date it was generated has already made 1%. So if so it's 1% in a week. So that's not bad going. And below that, you will see how the relative valuation has moved over time. And as you can see, in the last 1 year, the relative value of this company has fallen considerably. Okay, so that's very simply what is being stated here. If I go to the next section, which is sector rank, here I'm trying to find out, is, ये अच्छी company है क्या है या बेकार है? Now, there again, we rank every company every day using a multi-factor rank and compare it within its own sector. So this is a pharma company, and it ranks on the 42nd percentile. So, theek hai, it is not great, it is not bad, and if you just divide into 3 quadrants or 3 categories, it is in the medium category. But what is interesting is that what are the factors used to derive the rank? So now if you look at it, capital structure is not that great, 30th percentile, so it's in the low area. Analyst consensus view is actually not bad, it's 49th percentile, so it's sort of okay. Valuation, it scores very highly because it is a cheap stock, which we know. And future outlook is not good. So, it ranks very low. So this is future outlook is, growth in EPS forecast. So, so this is the composite. And then you can decide what you want to do with it. Do you want to buy it or not buy it? And so on and so forth. The final section is, so this tells you, an assessment. Now, you can make your own assessment. Is this a good company or not a good company? But we're just telling you all the factors that go into it. And, this is a big philosophical thing in Investor AI. We don't tell you what to do. We never tell you what to do because we believe that you are the master of your own destiny. All best thing we can do is to equip you and empower you with information. फिर आप डिसाइड करो क्या करना है कुछ करना है नहीं करना है इग्नोर करना है whatever you want so you can do that. If I go further, this is really interesting. This is the back testing piece that and is based on what is called the mean reversion theory. So those of you who have done statistics somewhere in your life You will remember the mean reversion theory, that if the price drifts away from the mean, it will bounce back. Now, how quickly does it bounce back? So if it takes 2 years to bounce back, फिर तो कोई फायदा नहीं है. But if it takes 2 weeks to bounce back, then you'll make money very quickly. So the average 3-month return is a indicator of how quickly the price has bounced back. So if this has happened 4 times in the last 2 years, which means that this price has fallen below the 20th percentile in the last 3 years, last 2 years. And if you had bought every single time, you would have made 7%. 7% in 90 days. So that's, again, not a bad kind of return. Now, so this is what the pages are telling you. I want to talk about one more thing, which is to do with how do I know this is right? And this is a question some people have asked me. How can I trust the algo? Because after all, it's a machine. It doesn't know the markets, and I'm watching the markets. How can I trust a machine? Now, the fact is the machine can actually take in many, many more questions and take in far more data. So, you can have an analyst. You can have your friend who's calculating some of these things. But they're never going to be able to calculate every day, every company, everywhere in the world. The machine can do that. So all the machine is doing is surfacing ideas to you so that you can make up your mind. Now let us see what is happening on this page. So you will see a target button on the top, which is in red in this picture. That target button will show you how the algo is doing in terms of accuracy. So the 3 black tiles, the algo accuracy tells you that in the last 90 days, इसका batting average क्या है? It has been right 85 times out of 10, out of 100. Okay. And the bottom tile tells you it has generated 226 insights in the last 90 days across all markets. This is not just India. And average return has been 19.8%. Now, 19.8% again over 90 days, if you analyze it, it comes to some crazy number. So, and this number changes every day. This is just yesterday's number because I took a snapshot from yesterday. There are days when the algo will not be at 85%, be 83%. Sometimes we've even had 93% once. So it moves up and down. What is important to remember that this is not accident. Okay, it is not just we have an algo and we wait for it. This is artificial intelligence. The thing learns. Okay, so this is like a child, when very intelligent child, but when he's born, he knows nothing, but he learns very quickly. So, a more intelligent child when he's 5 years old will know far more than a less intelligent child who's also 5 years old. So these algos are over 2 years old and they have been learning in different market conditions and all. And of course, they don't learn on their own. Sarthak has a little team that monitors them, tunes them, trains, keeps training them, and so on. So what you're seeing is a result of considerable experience and an algo that has learned over time. Okay? So, and what it has done, that if I take the last 90 days, if I invested in every single idea it has generated, my return would have been 12.2%, which is 3.3% over benchmark. Now, 12.2% annualizes at 48.8, which is fantastic. But it means 13.2% outperformance. Okay, so that's quite significant. Lastly, I want to show you that this is a consistently outperforming algo. So if I bring InvestorAi covers the world. So if I take India, I take UK, I take US, and I take Europe, and here is what you can see is the performance of this algo. So in India, for instance, it generated 105 ideas, and it outperformed the index by 3.3%. In UK, it was even greater outperformance because the market was performed less, and you can see for yourself. So it's a very consistent and a reliable algo, I would say. It is not right every time. So of course, if you invest in something, you could lose money. I'm not saying that you won't, but there is greater than 50-50 chance that you will make money. Now, before I proceed, I just want to ask a question. How many of you invest in the markets? So we have a little questionnaire that you are going to see. And please just click an answer and then you can see. So Prabal, if you can just do that.
Yes, sure.
While the questionnaire is going on, let me just share my screen. So I can show you the app itself. So, okay, so most of you have not used Investor AI, and that's fine, because that's the whole purpose of this, so that I can explain to you what is going on. Okay, thank you. So 69% of people are saying that they have not used, but what is very encouraging is 31% have used it. So that's really nice. Thank you everyone for using it. Now this is a page that will be familiar for those of you who have signed up. This is the home page. Before I go further, I want to point you to the top right-hand corner. If you click on that and you go into, that's the menu button. If you go into preferences, you should make sure your markets are selected. So today I've selected India, I've disabled everything else. And then you must also select your sectors. And again, for today, I have selected every single sector, but I can easily switch on and switch off some things. It's really, really easy. But if you don't select your sectors correctly, then you won't see all the insights. So for instance, if you're not selected auto sector, then you will never see any insight on autos. So let me now go to the value investing section. You have seen these insights. So at first, when you log in, it tells you what this thing about. You can always say, don't show it again because I understand what it is. So now it is showing me all the insights that are available in the system as of today. Now I want to show you a couple of really cool things. So firstly, there is a sort filter area. So if you go there, you don't have to see everything. You can just say, show me only the ones I'm monitoring, or show me only the ones where there is a gain, or show me only unread. So you can, filter by any criteria. And then you can sort it in order of returns and most read and, etc. So I'll just leave it the way it is. We typically show you 12 insights by default. And then if you want more, of course, you can always go back. So here there are only 14. And of course, if you have not subscribed, then you'll only see one in the day. The rest will be sort of blurred out. So let's take the first one here, which I think is Engineers India. Yes, it is Engineers India. Now, this is a really good example of how Investor AI is able to find really good ideas. So this is telling me that this insight was generated on the 24th of February when Engineers India was trading at 72.95. And at that time, it was on the 5th percentile. Price has moved up. It has now gone to 83.95. But because the market has also moved up, in relative terms, it still remains undervalued. So it's still at 5th percentile. But of course, I wish I had bought it on 24th of February because I would have made 15% since then. Okay, and then you can see how the relative value is beginning to move up, and so on. Now, if you look at the sector rank, now this at 75th percentile, this is really a good company. And again, you can see the breakdown. Capital structure is fantastic. So their debt equity ratio is very strong. Their ability to service debt is very high. Analysts love this company. So they've scored, average analyst scores rates at 76th percentile. Valuation is 78. It's a low, cheap stock. And future outlook is 51, which is not bad. Again, let's look at the accuracy numbers. Again, you see the target button on the top. So now today's accuracy for the algo is at 92% and 225 insights at 21.5% average. So, you can always check this to see, how this algo is doing. And we are very religious about it. We update this every single day. And then there is a live info button, which you go here and then takes you to Google Finance. So if you want to read news about Engineers India, you can sort of read whatever sort of about. And remember, look, you will always see, in the value investing algo, if you have not subscribed and you're on the free plan, you will always see one insight every day, or one different insight. And, we'll show you some of our best ones. And it just gives you an idea of, what is there. let me go to the third part of this. And by the way, wherever you see a question mark, if you click on it, it'll tell you what is it that you're seeing on the page. So it gives you, it's a handy piece of information. Now you want to back test it. So Engineers India has fallen below the 20th percentile 4 times in the last 2 years. And if you'd bought every single time, there's only once when here are all the instances. And in Feb 2020, when it fell, it did not come back quickly. In all other instances, it has come back pretty quickly. So this gives you an idea of of back testing. So this was quite an interesting one. Let's just take one more, Triveni Engineering. And again, 14th percentile, sector rank is 55th percentile, backtesting is 3.2%. And a very similar chart here, the relative value has changed. When the insight was generated, it was at 70 rupees. Today the price is 92. It's already gone up 31%. So you could say up to zyada nahi jayega, but it is still undervalued. So, I may look at it. Sector rank, not as good as Engineers India, but still not bad. And you can see it's getting most of its lift because it's still considered a cheap stock. And the back testing is reasonably strong. It's happened 4 times in the last 2 years and 3 months, plus 3.2 1 month, you would not have made money. So again, it's telling, and of course, you can share it in any way you like. You can put it on WhatsApp, you can put it on email, you can send it to your friends. So there's quite a convenient share button. But now what I want to show you is something really interesting. So you come out of value investing and you go into play, and you'll see cricket bats and a ball at the bottom. So if you click on play, now you can compare Engineers India. So let's take Engineers India. Engineers India. So now it is showing me comparison of Engineers India with Nifty, or the Indian market rather. The pink shape is Engineers India, gray shape is the market. It normalizes everything on a 0 to 20 scale. 20 is good, 0 is bad. And so larger the shape, the better it is. So you can see Engineers India does very well on 4 out of 6 criteria, doesn't do so well on historic performance, and not so great on future outlook. Now, you can compare it to industrials and you get a similar comparison. But if you're debating between Triveni Engineering and Engineers India, then you can say, I want to compare Triveni Engineering. Sorry, spelling, Triveni Engineering. And now you can see Triveni Engineering has a very different pattern. In relative terms, it's considered a cheaper stock. But in most criteria, other than historic performance, Engineers India is much better. And frankly, if I was going to buy one of these two, based on this, I would be seriously inclined towards Engineers India. So that's in summary what you will see in the value investing algo. A couple of pointers. Anytime you want to understand more, there is a little video that you can use either for value investing, or there are a number of algos that we have explained in quite a lot of detail. If you're actively monitoring any stocks, and these are the ones I'm monitoring, it will then appear on your homepage, and it will keep track of what you've done. So there's a company called Julith Holdings, which or Best Buy, I've been monitoring since 4th of March. And if I go in here, it tells me company performance. It tells me there's a live insight, there's a value investing insight, but this is US markets, and so on and so forth. So that's all. And again, I just want to highlight to you the fact that we have a number of insights in the system. But if you are in the free plan, you will see some of our best insights, but you'll see a sample. If you want to see the whole thing, then please do subscribe. We would welcome you in the InvestorAi family, and look forward to sort of hearing your comments and so on. So I'm going to stop here. Let me just stop sharing my screen. And
right, that was brilliant, Akshay. Thanks for enlightening everybody in terms of how do you go about deciding on insights and etc. Today we have strangely so many questions, so we'll have an extended session. And let's Prabal, do you have any more questions that you want to ask the team before we proceed with the Q&A?
Hi, Sarthak. Sure. I've got a couple of questions from the audience who have been asking uh, and wanting to know what they need. So the first question is, in today's world where there are so many platforms to monitor stocks and so many people are monitoring the stocks, is it possible that some stocks may remain undervalued? Should we do value investing as and when the opportunity arises, or as periodic plan, such as monthly or yearly plan?
Can I just take that? See, look, what we are showing you is relative valuation, and it's a not-absolute valuation. So in relative terms, some stocks will always be undervalued. Now, there is a current debate going on. And if you've not seen the recent interview by Charlie Munger, you have to watch it. It's really funny. A 94-year-old man giving fundas on value investing. But he basically said all this technology stuff is nonsense. GameStop is gambling, it's not investing. And he's really kind of quite vocal about it. I suppose in 94 you have the right to be opinionated. But it drew a robust response from Chamat Palahapatia, whom you have heard of. I like the guy. He's quite iconic. He's quite charismatic. And he's basically saying the world has changed. Value investing is an old-fashioned concept. And, technology stocks defy everything. Airbnb doubles on IPO, DoorDash doubles on IPO, and, so on and so forth. So don't worry about value investing. Just get into good stocks and hold them forever. And his view is if you buy Tesla, anytime is time to buy, and your hold period is forever. Now, it's a bit of an extreme view. And I'm not saying there is no logic in what he's saying, but it does not invalidate value investing. Okay, there are different investing styles, and the world has changed. Value investing has always remained, or will always remain, a solid concept. So, that's what I would draw from it. But it's a very interesting exchange of intellect, experience, and market drama.
I will just wait.
That was a yeah, okay.
Sorry. So just to give some more highlights, everything in life is a continuous process. So if you're buying value insights today and that becomes your style, you'll continue to do so. And again, in the app, we generate close to 7 to 11 insights on value every month. So that's on India. So I think you would have enough choices to actually reflect and take decision. So segueing into the next question that we have, uh, should we okay, does it show any exit point for stock in terms of price or period? So typically it shows you when to enter. It's typically 20 percentile and below. And I mean, there is no hard and fast rule, because see, you bought a company, at a very low price. The thing is, if it continues to do well, EPS continues to beat, you continue to hold, right? But generally, the holding period that the app suggests is 90 days, because that's a period when the mean reversion hits the peak.
Actually, Sarthak, sorry, if I may just add to what Sarthak is saying. So for this signal is a 90-day signal, and after that we close it. But remember, this is value investing, guys. You could hold it for a very long time. You take Warren Buffett; he's held things for decades. Coca-Cola कब से खरीद रहा है? बचपन से. अभी तक he's holding. So his thing is, if I like the company, then I'll hold it for the long term, and he's been proven right. Now, the way I think about it personally, like if I like Apple. If I buy Apple at a good price point, then I don't want to sell Apple because I'm not there as a trader. I like Apple as a long-term stock. And my view is that if Apple goes up, I'm very happy. If Apple goes down, I'm actually also happy, because I'm not unhappy holding Apple, because I know I'm holding a good company. Later on, it will go up. So in value investing, I would urge you to take a slightly longer term view and take it. Alpha 330 is a different algo. When we have a webinar on Alpha 330, we talk about it. It's a 30-day signal. And we show you the signal strength every day. And when you see this signal dropping, then that's a good indication. It tells you, that signal has dropped and maybe it's a time to exit. But value investing is different. It's a little longer term.
Correct. So Akshay, the next question is what is the timeline of historical data used by Algo? So again, we
So
love
ask the
such
governor,
questions.
you're the,
Yeah, so we
crazy
have
man.
10 years as a minimum. So whenever we have longer history, whenever it starts trading, we generally take it. But for company, for value investing in particular, you need to have a longer period to understand the valuation levels at different points in time, bear market valuation, consolidation valuation, and stuff like that. So let me
And
just
everybody I talk to in India, Sarthak, talks about Reliance. Now, I've seen polarized views on Reliance. There are people who don't like Reliance and people who believe this is the Tesla of India. You have to hold it forever because kuch na kuch to karte rahenge. Then, but if you take 20 years ago when Dhirubhai start, or even longer when Dhirubhai started Reliance, it used to make polyester yarn.
hmm.
Or how far they have gone from polyester yarn to what they're doing today. So you could take the view that Reliance is the best value investing stock. एक बार खरीद लिया तो कभी नहीं बेचने का. So again, a lot of your personal judgment of the market and what is going on in the economy is very, very important in this. Never lose sight of that. The app is there to help you. App is there to guide you and give you all the information so that you don't have to do any primary research. But it doesn't substitute judgment.
So there's one more interesting question by Gautam Raja. He asks, shouldn't the investor invest in all the ideas to beat the returns of the index? It could be a problem for retail investors. What do you think?
Well, again, it's always good to diversify your holdings. But having said that, do you buy the entire portfolio on day one? You always structure it. You buy some today and some after 15 days. And when at the long run, and that's the very fundamental concept of how systematic investment plans do well, because you're buying at different points in time. And as long as you're buying good undervalued companies, you're safe. And again, there is a concept of diversification, there's a concept of diversification. So beyond 10, 12 companies, if you're not a professional investor, I would advise not to go there. 8, 10 is plenty. um,
See,
so sorry.
one of the things Sarthak brought up a good point. How many companies can you actually track? Now, my view is that my own portfolio, personal, is about somewhere around 15 to 20. उससे ज़्यादा नहीं समझ में आता है. If I have 70 stocks, looking at it every day becomes very difficult. And frankly, that is one of the reasons we came up with active monitoring. That I said, I can't monitor all these stocks. Please let machine do it for me. Now, that is a very interesting concept. And we've got some very new, very interesting, cool new things coming up in active monitoring. Actually, we've got a number of cool things in the product pipeline forever. And I mean, just the other day, I was talking to somebody and I said, is your app in beta or is it final? I said, this app will never be final. If I can help it, it will always remain in beta because we'll always keep adding ideas, adding features. You guys will give us suggestions. One of our customers actually told us that he buys every single idea that we generate in value investing and he puts 20,000 rupees on it. Now, I'm not recommending that for everybody. That is his style and his way of doing it. So don't buy stocks you don't understand. Don't buy companies who have no idea what they're doing. Buy companies where it makes sense to you. So please do not substitute anything you see for your own judgment.
So the next question, Akshaya, is what percentage of one's portfolio shall one focus on value stocks? How much would you?
That's an interesting question. And I think before that, there's a question, how much should you be in equities? Now, I was just 2 days ago, I was talking to somebody about it. And the point is equities, if you take a long-term view, have always outperformed most other asset classes. The trouble with equities, they're volatile. So if you have a 20-year perspective and you're never going to sell, then that's a different matter. But very few of us are like that. From time to time, we need money. Now, question is, when you need money, if it's a down part of the market at that time, then then it's not. Then it could go against you. The question is, how much should you hold in value stocks? The practical answer is, how much time do you have? If you don't have a lot of time to monitor things every day, then I would suggest you allocate a greater portion to value stocks, because those are ones you buy and sort of not forget forever, but you don't have to track every day because you're fundamentally convinced that the company is a good company. So it's a high conviction hold. If you have time to look every day, then you can perhaps be a little more adventurous. I, for instance, don't have time to look at it every day. I actually look at it from time to time. So a good portion of my portfolio is in value stocks. If I had more time, maybe I would have a bigger portion in, more frequent trades that actually come. Look at an Alpha 330 algo. That's really the one for that. Those are 30-day ideas.
One
That's a
very,
yeah.
so one very good question, and this is Shailesh. I'll direct it to you. How much efficient is swing trade and paid memberships? Can you reflect on the 5 insights that we generated? Last 5 insights on swing.
Sure. The last 5 insights we generated was yesterday we had Tata Power a short. It actually opened up about 0.5% up and then it went down 3%. Though the market had opened down, it had opened in the green. So we read a lot of technical signals every day and we add some fundamental data, and based on that, long and short insights are created based on how American markets are closed, how the market views are, and how the securities are open. And this week, we had other insights. For example, L&T Infotech that had actually crossed short a lot down. And on, I think it was an insight on Monday where we saw the Friday, the algo, not us, the algo itself had predicted that there was some volume jump at the end, and it was trying to see that there's some buying going on. And you saw in the next 3-4 days, though we hold swing for only for 3 days, it actually went up over the week, and it almost went up at a point. It was almost up 11%. But that being said, we saw some signal in Bharti Airtel that it didn't quite bounce back, but it might next week. But there are all these ideas.
Good. So the last 5 insights we averaged around 4%, right, Shailesh? Close to that.
3.7. Yeah, 4%. Yeah.
So here's one question. Can we use to evaluate our portfolios using InvestorAi? Good news. Answer is yes. Please watch this space. Maybe in a month's time. Okay, I'm having technical issues and it is closing. We'd love to hear from you. I have shared Siddharth's number. Please do reach to us and we'll fix it as soon as we can. So
Sarthak, just one thing on the technical things. Sometimes what happens is, especially if you're on Android, if the update hasn't gone through, then sometimes that happens. So if you just go and update and re-download the app, 99% it will sort out. But in any case, Siddharth is on the call, and after this, please reach out to him, and we will immediately sort this out for you.
So there's one interesting question about the app. Mr. Rajiv Narang asks, what does it mean when the signal says none, while the signal had been initiated less than 30 days back?
Let me take that. So you're talking about Alpha 330. And so that is a 30-day signal. And because Alpha 330, the name as it suggests, targets a 3% return over 30 days. Now, when the signal is high, on the date the idea is generated, the signal is always high, otherwise it would not be generated. But obviously, as markets move and prices move, the signal fluctuates day to day. So on the day you're looking at it, we will tell you whether the signal is there or is not there. And if it's not there, we'll tell you it's not there. So, and if you scroll down on the same page towards the bottom, you will see the signal, how the signal has moved in 30 days. So on the day when you're seeing it, if there's no signal, it will show you that there's no signal.
So there's one more question on the same lines. Mr. Jaswinder asked, what is threshold chart? What is it showing?
Okay, that's the bell curve that shows the valuation of the company. So if anything below the 20th, that means it's undervalued, Mr. Jaswant.
You'll see a dotted line over there. That's the 20th percentile. To the left is undervalued. To the right is not undervalued.
Pranav Gupta, can we filter the good companies based on 5 factors you showed? So Pranav, in the Play universe, it is the largest in the world. So our coverage right now surpasses everybody. From US, UK, India, But the thing is, it is based on discovery. You will have to check companies to see how the multi-factor rank is. But that's a very good suggestion in terms of identifying the best in every sector, like the best in class. We will look to incorporate that into the
Actually,
next.
I think this is a very interesting idea.
Yeah.
Sort of list of things,
Yeah.
growing as long as our arm. But thank you very much. We will certainly incorporate some of these good ideas over time.
But if you're
That's
looking
my
for
other
individual
question.
factors out of those, you please head to our fundamental section. So you do have low PE ratios, low price to book, companies trading below price to book ratio. So you can figure those securities out. But yes, as you said, we will work on something that does more.
Rajiv Narang, does that mean when the signal says none, despite it's not completed 30 days, shall we exit or hold? You should totally hold and you should never exit till the 30-day period is over. But if you're entering and the signal status is saying inactive, do not enter. Wait for the signal.
No. But wait, no. Let me just answer it slightly differently. So, Rajiv, if you bought it, let's say a signal got generated, on last Monday, and you buy it on Monday. If you generated 3%, then, and that's happy, you're good with that, then exit. So don't just hold on, because signal is just a guide. Your own judgment is most important.
No, see, that is the difference, because everybody uses InvestorAi in a different way. So one of our users, like Akshay, was reflecting every value inside he puts in 20,000, and now he's yielding 11% alpha over the benchmark. So, well, again, whatever works.
Whatever.
Does anybody want to ask the question directly to Akshay on video? I'm taking them. Please volunteer and we will spotlight on you now.
Okay. No, I think we've overrun quite a lot, but everyone, thank you so much for your time. We hope you enjoyed the session, and we hope you like InvestorAi. We are very proud of it. We love the product, which is why we all spend time on it, and we love the fact that you're giving us suggestions, and keep them coming. Write to us. We will always like to hear from you. So from my side, thank you so much for joining.